Google is a money generation machine and now its board has approved plans for 20 for 1 stock split. So let's explore what a stock split is, what Google is planning to do, why they are doing it now, and my perspective in the end if this is the right time to buy, sell, or wait. Hi, my name is Sunny and I make content that affect a common man financially. So let's dive into today's topic, Google stock split a buy. If you're new to this channel, please subscribe to it alongside smashing that like button as that will help me with the YouTube algorithm, which will be highly appreciated. Google rebranded itself few years ago Alphabet, which until now has got three classes of shares, A, B and C depending upon its voting rights. This is not for the first time they're planning to split their shares, which they have done it earlier also. The major reason why companies split shares is to make them more affordable, thus wider shareholder base, which eventually help them to have a larger market cap. When they split shares, existing shareholders get free ones proportionate to what they have now. Consequently, the stock price falls in that ratio. As an example, like in this case, if they split their shares 20 to 1 with today's market price of $2,865 per share of Google on the day of recording, it means for every one share you own, you will get 19 more free shares of Google. Consequently, the stock price will fall by 1 divided by 20 and the new post-split stock price of Google will be around $143 in this case. Remember one thing, stock split does not mean price of the stock remains same and you get more free shares because for the total market cap of the company to remain constant, per share price has to fall. Hope you get the idea. Google has demonstrated in this quarter that they are a huge money printing machine, which is clearly evident from the rock solid Google search business as well as YouTube's increasing strength, whereas Google Cloud is still work in progress as compared to their bigger competitors like AWS and Microsoft. This resilience in its core business enabled them to successfully navigate through Apple's privacy changes, which has brought down Facebook by 25% in a day. You will agree with me that at this price, Google stock has become more expensive lately, which has almost doubled since 2020. Now, for this split to happen, they have to go through shareholder approval. As a result, more investors might be able to afford buying the entire stock who presently can only afford to buy fractional shares since the stock price is too high in dollar terms. With this increase in affordability, hopefully shareholder number will increase, so will be the volume in their stock being transacted on the exchanges and finally will result in increased market cap. Now, this increased market cap simply implies the total pie has increased. Hopefully, our shareholders will be more wealthier than what they were pre-split. At least that is the hope. You can't be certain about future as far as stock market is concerned, thus have to make a calculated guess. It has got an exceptional business model with Google search engine, YouTube as well as their cloud business, thus giving this technology giant a market cap of nearly $2 trillion. dollars. Clearly evident from their Q4 numbers, they have shown exceptional growth in revenue, profitability, and all other metrics quarterly as well as year over year. I clearly see three distinct reasons why we should be buying Google pre-split, and those are: number one, they have got a cash of almost 140 billion on balance sheet supporting a debt of 15 billion. Employing this huge cash pile, they can afford to invest in technologies of the future, giving them the financial clout to take some technological risks if they have to, or go for some acquisitions that can catapult them to even higher financial metrics. Number two, according to my opinion, they have a very profitable business in Google search engine as well as YouTube, where they are clear, distinct leaders in their respective categories. Google's domination allows them to monetize their search and content using targeted ads. That is why their revenue as well as profits are growing rapidly every year. Number three, in the cloud business, Google is clearly number three after Amazon and Microsoft. But when you are growing at 45% every year, it's a matter of time that you will bridge this gap. It is trading at almost 26 times earning, which is not bad for a company that is growing in excess of 30% revenue every year. In my limited wisdom, this stock split will enable them to have a jump in stock price, at least in the short term, which exactly happened when Apple or Tesla did their stock splits. Even in long term, Google will be trading much higher than what they are now pre split. Therefore, I see no reason, technically or financially, Google will not achieve that. But that is me, I might be wrong. Do your own due diligence before investing based on your risk tolerance. As a disclaimer, I'm not a financial advisor. Please consult one before investing based on your personal financial situation. If you like the content that I make, please help me and my channel by liking, sharing, and subscribing to it. Thanks for watching and see you in the next one.